99% of traders lose money in the market, but it just takes one thing to click in your brain in order to change that. I've been trading now for over 8 years, and for the first 6 years that I traded, I was an either losing or break-even trader. But then something clicked, and for the last 2 years now, I have outperformed the markets. Are you making as much money as you want to from the stock market? Stick along with this video and I'll teach you the 3 steps that help change my trading forever. Step number 1 is to build an objective trade system. Too many beginner traders think that they can read the market, think that they can just pick what stocks are going to go up and down and make money over time. There's a very good chance that you can't do that. Thus 99% of traders failing. But what you can do and what profitable traders do is trade market structure statistics. They prove statistics that make money over time based on win percentage times risk reward. And you're going to see step by step how I build one of those trade systems right now. One of my favorite quotes is work smarter, not harder. I have thrown a 9 and a 20 length simple moving average on this chart, and I want to test a strategy that enters when these moving average cross and exit when they cross in the other direction. I do not have the data entry skill set that would be able to find every example of those happening and make note of each example of that happening without it taking me hours and hours of work. But what I do have is a degree in computer science.
Why are they confessing?
They're not confessing. They're bragging.
So we are going to utilize code to build out this strategy to do the data collection for us. To not distract from the central topic of this video, I've just gone ahead and created and thrown the strategy on the chart behind my head here. As you can see, the strategy is entering when the 9 SMA crosses above the 20 SMA, and it's exiting when the 9 SMA crosses below the 20 SMA. I have also turned on one of my custom coded studies here, which shows you the P&L of the strategy. Now, obviously, this is an extremely simple strategy, but once again, not to distract from the central purpose of this video, I want to keep the strategy simple, right? This is not a video on how to build a complex strategy. It's a video on the steps you need to take to become a better trader. So that's a check mark on step number 1. We have built an objectively defined trade system. We no longer are guessing where to enter or where to exit stocks. But this means nothing without taking a closer look at the data to ensure that the strategy you just built is actually profitable over time. Which brings us to step number 2, backtesting. Have you ever heard the quote that profitable trading is boring? Well, this is what that quote was talking about. Backtesting tends to be an arduous process full of manual Excel calculations, but I do have my own, once again, custom coded study that is going to apply backtested data onto the chart. So directly on my Thinkorswim chart, I can now see data such as total trades, the total P&L, the win percentage, average win, average loss, and max drawdown. And as we click across multiple different tickers, you will see the studies and the data from these tickers thrown up directly onto this study here, which does make backtesting a lot easier, but unfortunately, there is still some more depth that we need to dive into to pull actual meaningful numbers. So let's do that next. So I have an Excel template that is laid out for the data that I just showed you from my custom study. Number of trades, total P&L, et cetera, et cetera, et cetera. And the way that I go about at least the initial back test of my strategies is I run them on the tickers A through Z. At least the tickers, you will notice there are some holes because not all the tickers are either trading anymore or are not equities. There's some like weird funds in some of the letters. So all the individual letters that are actual single equities and still trading, I run my back test against them first to get an overview of how my strategy is working. This helps to give me a nice self-randomized good cross-section of the entire market. It helps prevent me from subjectively picking stocks that I know are going to work well with the strategy, right? You can't load up a back test of a strategy, look at Nvidia, Tesla, Apple, Microsoft and SPY and go, oh, wow, look at how profitable this strategy is. You just subjectively, maybe in the back of your mind without even really thinking about it, picked already very strong stocks. You can pretty much close your eyes and hit the buy button on any of those tickers and you're going to make money, right? So this is how I go about randomizing my data selection. So what I'm going to do now, and I'm not going to bore you all with all of it, is I'm going to go fill in with this strategy that we built, tickers A through Z for each trade's total P&L, et cetera, et cetera, et cetera. So I have filled in every row except for the last one here, except for letter Z. All of that took me, I'm not going to lie, about 7 minutes. And I want to fill in this last row with you just to show you the power of this study because I love it. As someone who has done hundreds of hours of backtesting, let me tell you how much this thing helps. So all I did was I moved the Excel document off to my other monitor here. And now I pulled up ticker Z and I'm just going to type in 57 for total trades, 17268 tab, 35 win percentage tab, 2240 tab, minus 744 tab, and minus 11719. Enter, and I'm on and ready for the next round. But there, in less than 10 minutes, I got 5,681 trades worth of meaningful data. I love that custom study. I'm super glad I built it. But anyway, let's talk about the next step to backtesting, because now you have a data set, and I'm not going to lie, this strategy surprises me a little bit. It's got a 45% average win rate. First off, it's up $369,000 on $10,000 positions. Now, remember, I am looking at the max daily chart of all of these, and a lot of them go back to the 90s, if some of them do. So this is a lot of trades. Don't look at this and get too enamored. But a 45% win rate, trading with an average win of 847 and an average loss of 480. So that's very nice. Obviously, a profitable risk reward multiplied by win percentage. Your max drawdown being $176,000. And I like to calculate this drawdown percentage too. That means you have a drawdown of minus 48%, which is maybe not amazing. It's definitely not too bad, but say you want to have your max drawdown closer to, 25, 30% is where you're comfortable, where your risk management fits in, because all of this, I haven't mentioned this yet, but all of this strategy building type stuff is all going to be determined by you, right? You need to determine what your risk portfolio is, what your goal in trading is. All of those things are going to factor into the types of strategies you want to build and the types of statistics you're going to want to see in your back test. But the next step you would take here is you would come back into your strategy. And the beauty of using code to strategize is you would come back in and go, okay, well, I tried the 9 and the 20. What if instead I try the 9 and the 50? Let's just try the 9 and the 50, and let's see if I can't get a better drawdown statistic with the 9 and the 50. So you would do all this again. Once again, beauty of this study, collecting all this data again would take you about another 10 minutes rather than another couple of hours, which is really, really nice. It allows you to optimize much, much, much faster to build better and better strategies. But you would run it all again, and you would hopefully either find better or worse, and then you would switch your variables and you would try it again, and you would try it again until you got the results that you wanted to see, right? You get the results that match your risk management index, your goals for trading. You get all those results, and now you have a perfectly optimized strategy. But let me also add this. There is, unfortunately, a never-ending aspect to this. You always need to be keeping up with your strategies because markets are ever changing, right? The stock market is never always doing one thing. The stock market is never always acting in the same way. And you are running this strategy based on a static back-tested data that's not changing. It's not that hard to make a profitable backtest on static data, right? So where backtesting becomes really powerful is that you continuously are testing your strategies as market conditions are changing to ensure that these statistics aren't getting outside of your volatility bands or your risk management bands, whatever you want to call them. And there's a little bit of a secondary game that plays into that though as well. And sorry if I'm getting a little bit too deep into this, but backtesting is very, very important. If not boring, very important. There's a little bit of a secondary game in that you don't want to be testing too much, right? You don't want to be every single week adjusting your strategy. It's way too much curve fitting, and you'll end up missing the real upside of the strategy because you change it because of a little bit of downside. The way I would suggest going about it, now once again, you have to decide this for yourself. You have to decide the volatility metrics for yourself. My green screen been messed up this whole part. I'm not redoing this recording. Sorry for the green screen. Where was I? You have to decide for yourself your own risk management on this, but what I would suggest is doing it once a quarter. If you want to do it once a month, if you want to do it once a year, it's up to you. Just make sure you are staying always optimized to ever-changing market conditions, but not too much. The third and final step that helped change my trading forever is going to be the easiest to cover in video format, but I promise you by a multiple of at least 10 is going to be the hardest thing to actually do, and that is to follow through. And what I mean by follow through, it's actually take the trades like you're supposed to. Follow the strategy exactly like you're supposed to. You just did steps 1 and 2, hopefully. You just built an objectively defined trading strategy. You back tested and optimized and are continuously optimizing that strategy. All of that work, it's a lot of work that you just did. All of that work means nothing if you don't actually take the trades like you're supposed to. But that's where trading psychology comes in, right? Have you all ever seen the image of the guy pushing the boulder up the hill? He's learning how to trade. He's learning risk management. And then he finally gets to the part where he begins building systems and he falls in this little pivot where he then has to learn trading psychology as the next mountain. I really resonate to that image because it's so true. Trading psychology is the next step. That is the actual implementation of everything I just said, but it's you must do it. There's no point in proving and doing all that work and proving it's profitable if you can't do it. What I will suggest is to journal your trades. Everyone says to journal your trades. I know I've heard this a billion times, but you're now a system trader. I just turned you into a system trader if you haven't already caught on. I haven't said the words yet, but you're now a system trader. It is vital to continue system trading and continue that mindset into your real money trades, even more so than all the backtesting we just talked about. Backtesting is one thing, and it's important and it must be done because you must prove that at least on what's already happened, the strategy works, right? But what's more important is that you make sure that on what is currently happening, the strategy works. Let me say that again. What is even more important is that you make sure that the strategy continues to work on what is currently happening. It doesn't matter if your backtest made $800 million if you've been losing money for the last 3 months. No one's going to give a shit how good your backtest looks, right? So journal your trades and ensure that your journal statistics, so capture these same statistics in your journal and ensure that they continue to remain in line with your backtested statistics. That's when you begin to know that perhaps the market has shifted and perhaps this strategy isn't going to work anymore. It's outside of its working market condition. When you start to notice, okay, over the last 2 months, I've had a 35% win rate. Okay, over the last 2 months, my average wins remain the same, but my average loss has jumped up to $700 a trade. When you start to notice those things in your journal, you can stay ahead of potentially changing to another strategy or re-optimizing this strategy so that it's currently working, right? It's so important. It must be done. Nobody wants to journal, just like nobody wants to backtest, because it's I just realized I was covering that when I was going over the numbers earlier. Sorry. It's the long, arduous process of testing. But as we talked about earlier, profitable trading is boring. And that just is a true quote. And it's what you need to do to get to where you want to be. You all got a chance to see in real time there how impactful some of the studies that I have built can be in building trade strategies and building trade strategies faster and more optimized. Well, I want to let you know that all of those custom studies that I have created are available for download on my website, daytradingstrategies.net, and more than just the studies, all my scanners, all my strategies, my workspace, they're all available for download on daytradingstrategies.net. top link in the description down below. And for those of you guys that made it this part in the video, I always say you guys are the ones taking your trading education seriously. I love to give you guys a little bit of an extra boost to hopefully help push you over the hump and to get you to where you need to be. So if you use discount code END at checkout, you're going to get access to all of my codes for only $15. Let me just leave you with this. If you just watched this video and you're not making money in the stock market, if you're treading water at break even, or God forbid, still losing money in the stock market, if you just watch this video and you change nothing about the way you trade, you just wasted 15 minutes of your life. I just gave you a blueprint that helped change trading forever for me. And I'm not promising you that if you go do these things, you're going to be a millionaire by the end of the year. That's not what I'm saying. But I just gave you the blueprint of what I did to make me profitable. And you should at least go try these things. If nothing else, go give these things a try. See if they can do for you what they did for me. So hopefully I get an email from one of you in the future. I've gotten them in the past about videos. So hopefully from this video, I hear from at least one of you in the future about how this helped sort of turn the tide for your trading. And I look forward to that email. With all that being said, I'm going to go ahead and sign out of this video, but I'm actually going to link you all to a video here that more in depth covers that backtesting study that we utilized in this video.